everybody, it's Marc Carriere here. I'd like to talk to you today about building a marketing program or campaign budget and provide you with a sample template to get you started. Okay? The reason I've decided to do this is because it never ceases to amaze me how many businesses spend so little time creating a budget for their marketing campaigns or lead generation programs. You know, often they're so caught up in the excitement of some new tactic, and they want to get going with this new tactic, or they're under pressure to make something happen, that they don't take the time to properly develop a strategic plan and budget. Many times I've looked at marketing plans, campaign plans, and associated budgets of clients that I've worked with, or organizations where I've worked, and thought that they must have worked out their plans on the back of an envelope during a brain session at the local watering hole. And you can generally guess what happened to those campaigns and programs. I'm not just speaking about SMEs either. You'd be surprised how many large businesses suffer from the same problem. Over the years, through bitter and personal experience, I've learned that before you spend any money, time or energy launching a marketing campaign or program, you need to spend all your time and energy ensuring you've got all the bases covered in terms of costs, revenue projections, to determine your overall cost of sale before you pull the trigger spending any money. I call this getting dirty with the numbers. Now, I've found when I've prepared a proper and comprehensive budget, it actually drives the strategy of the campaign or program. Often the initial ideas I've had are amended or changed because the cost per sale projected didn't quite stack up. This was often due to the interrelationships between the costs and revenue involved, and quite often I've binned the idea because I just couldn't make the numbers work. Now, remember that old cliche, if you fail to plan, you plan to fail? Yeah, I can see you rolling your eyes now. Just keep in mind, the reason that cliche has been around for so long is that it's right. From my experience, the reason many people don't prepare proper plans and budgets is because they haven't been trained in their use. Small business people particularly are quite good at the sales and customer service end of the business, but lack the understanding of how to develop proper budgets to get those customers in the first place. They aren't alone either. As I've said earlier, many large companies have the same problem. Simply put, marketing budget is an estimate of the projected cost to market your products or services. However, in my view, it should also include the sales costs and projections to determine the revenue side of the equation. After all, we need to include all the sales, marketing, product, and fixed cost projections together with the sales revenue projections so we can determine the overall cost of sale and profitability of the program. If you only cover the marketing side of the equation without considering the relevant sales components, you're just setting yourself up for a conflict with the sales department. Ever hear the salespeople say, "Hey, why'd you put those close rates in? We've never closed at those rates before, and you're way off on the average sales value too." You know, it's kind of like baking a cake. If you don't include all the ingredients in the proper proportions, you'll never get the outcome you expected, or is that hoped for? To help many of you construct a marketing campaign budget, I've included a sample for you that we'll show you shortly as a guide. You know, of course, be sure to get the help you need to ensure you've covered all the bases in your business. Yes, that means having the bean counters in your finance department or your business analyst go through your budget to make sure you've included all the cost items and that they've been costed realistically. If you're an SME, use your accountant. That's what they're there for. Now, when I say be realistic, this means be sure you've included all the costs associated with the campaign accurately and that the corresponding revenue is realistic. All too often, people forget to include all the costs involved in making a sale. And more often, people are too optimistic in the sales projections. If for no other reason, think of this as taking out some job security insurance. Okay? Make sure they, and I mean the bean counters or your accountant, go over your marketing and sales projections and agree that they are realistic. If they suggest your projections aren't realistic, have that discussion then and there and agree on the figures first before you pull the trigger. If the finance and sales departments have provided their input and signed off on the budget, you made them partners in the process. It is pretty hard for them to hide if things go pear-shaped later, especially if you've executed the marketing components properly. One last thing about being realistic. Okay, beware of spreadsheets. They can give you any number you want. Hey, we're only human and under a lot of pressure to get something out there to get those sales. I understand. I'm going to show you a sample template that should be coming up on your screen in a minute that is designed for a lead generation program to deliver qualified prospects to the sales team. The basics are included as a guide for you to understand the concept of building your budgets, your own budgets, to suit your own purposes. With a few changes, you can modify this to suit your need. So now on your screen you can see the standard campaign budget template. Now you can see I've got campaign name there. Obviously you put in whatever the campaign. You'll see another column to the right says inputs, and then we've got 12 months out and then a total. Now usually what I like to do is do a 12-month projection, because you're going to find a lot of things will change in terms of seasonality. Different months will have different characteristics to it, different changes that you have to consider. So as this is for generating sales appointments, I usually start off with how many appointments I intend or want to deliver in each particular month. Below that we've got the closing percentage, and this is where I said earlier you need to work with the sales department. And closing percentages could change on a monthly basis, but in this example I've just flatlined it across. But you need to talk with them and use the sales closing percentages that they give you. Obviously net sales is just a function of the sales appointments multiplied by the closing percentage. Gross average sales value would be the total product cost. And I've also put in sales incentives to remind you that you might have some sales incentives, could be discounting on the prices, whatever tools that the sales department will use. And of course you've got to include those if there's a cost against that. And that leaves you with the net average sales amount, which of course is your gross sales value less the sales incentives. Now that would be the revenue side. The net sales revenue, of course, is your net average sales amount times the amount of sales, net sales, okay? Now just another note too, if you have, in your situation, clawbacks or cancellations or things like that, you need to calculate what's the proper cancellation percentage and how many sales are you likely to lose, so you make sure you end up with a net closing rate to get the net sales, okay? Because we only want to talk about net business here, not gross business. On the expenses side, now we first look at, say, personnel costs. You'll see I've put here sales fixed, and in the inputs I've sort of indicate there that 3 reps at $30,000 a year would be $90,000 in costs, and you can see $7,500 per each month. Well, that's basically just $90,000 divided by 12 divided by 3. Okay, sales commissions, if you're paying sales commissions, well, in this case I've got 5%. Well, that's 5% of the net sales revenue, because obviously you wouldn't pay commissions on canceled business, would you? Telemarketing, what I've done there is, used $175,000 to be their total costs. Again, that's split over 12 months divided by 5 to give us $14,583. Marketing management, I've put that in arbitrarily as $75,000 a year, and again divided it over. Now, the other thing, and this is one particular thing that most people leave out, is the payroll taxes benefits. This is generally considered what's called on costs. And typically, each organization is a little different, but typically this includes the superannuation, the payroll tax. What you've got to do is find out from the bean counters in the finance department or your accountant, what your on costs are. And in this example, I put in 17%. And then we talk about the other program costs. So the other program costs would include things like product costs. What is it that you're selling, product or service? What's it cost per sale? So what's the unit cost for each sale? In this case, I've put 1,485. And then in your sales, that's just a function of how many net sales times that 1485. Lead fees, well, we'll talk about that later, but I've worked that out that they come into $65.31 per appointment. And of course, you're going to have to figure out how many appointments that are generated times that amount. Next, we've got just general things that you've got to remember that are part of the cost, and that could be equipment costs, telephone expenses. I've probably, in this example, underscored that. Probably should be higher, but these are things you've got to figure out. Operating expenses, that could be, different costs related to making the sale, could be fulfillment, things like that. I'll talk about that a little later. Recruitment and training. Let's say just for the telemarketers, what does an ad cost if you're going to have to hire or continue to train? Then you got professional fees, which you'll notice here I've put into different times of the year, and that could be other things that are needed related to legals or accounting or other sort of professional fees like that. Now you'll see that you've got the total expenses, then we've got the cost per sale, and the cost per sale is the total expenses divided by the number of sales for that particular month. Then your cost per sale percentage is your cost per sale as a percentage of the total net revenue. Okay? And then of course you can have in there, depending on your situation, you can put in net margin as well. Sales appointments. Make sure the sales departments have signed off on the number of appointments you've projected for each month. They need to be sure that they have the sales reps and administrative staff in place to service these lead commitments each month. Of course, the appointments you've scheduled need to be adjusted and everything else if the sales team can't support the number of sales appointments projected to be delivered. This is a very good reason to get the sales department involved from the onset of the budget process. Now with net closing, again, have the sales department sign off on the close rates. Don't be foolish enough to go it alone. You'll see that I've flatlined the close percentage across all the months in this example. This was only to save me some time. Be sure that you check that the historical close rates for these types of appointments for each particular month. Seasonal factors always come into play with close rates for many companies, and could be the same with your particular situation. Net sales. Now, when we say net sales, we're talking about net business, the kind that allows you to bank the money. If you anticipate any cancellations or returns of any sort, you need to show these as gross sales together with your net sales as a new line item. In these cases, you would also have another line item for cancellations and then another for cancellation percentage. This is the average sales price sold to the customer. If you have any goods and services taxes to account for, ask the finance department how to show this. At the end of the day, to determine cost per sale and profit, you need to be working with net numbers. Sales incentives. Do you provide any discounts if they buy on the day? Any promotional offers included in the purchase? If so, you need to account for these as well. Due to the different nature of everyone's business and the different ways each business account for their campaigns, you'll likely make a number of changes to this format to suit your specific needs. That's to be expected. The important thing to remember is that you must get dirty with the numbers first. Make sure the campaign or program is cost effective. Make sure you cover all the costs and you're realistic with your sales projections. Get buy-in from your finance and sales department. Remember, it's a team effort. And, as I said earlier, we only have so much time and energy, so make sure you invest your time and energy wisely before you spend any money. Thanks for your time. Any of the templates that I've displayed, budget templates and things like that, they're all available on my blog, so I invite you to go there and you can download them from my blog or find a link to them, and you can reach that at www.whatsaleadworth.com, or simply send me an email if you're on LinkedIn. You'll find me there, Marc Carriere, MarcCarriere. Good luck and have fun. Bye-bye.